You know, when most people hear the word Ethereum, their minds usually jump straight to digital money, right? Some kind of competitor to Bitcoin. But honestly, that's like saying the internet is just a place to send email. You're missing the huge picture. So today, we're going to look at Ethereum not as money, but as something way, way bigger, a world computer.
And it all really kicks off with this one simple but kind of mind-bending question. What if money wasn't just a static number sitting in your bank account? What if it could have rules and logic baked right into it? I mean, what if your money could actually do things all by itself?
The answer to that question requires a total shift in how we think. So, for a minute, just forget that Ethereum is a currency. Instead, try to picture it as one single, massive computer that's spread all across the globe. And it's shared. Anyone with an internet connection can use it.
Okay, so keeping that world computer idea in our heads, let's dive into our first section and really break down what Ethereum actually is. Because at its very core, it's a platform that was built from day one for digital innovation.
So what can you actually do with it? Well, it boils down to three main things. Yeah, of course, you can send money, but, and this is much more interesting, you can create digital agreements that are basically unbreakable. And you can build apps that aren't owned or controlled by a single company like Google or Meta. They just run on their own, powered by that global computer we just talked about.
So how does this whole thing work under the hood? Well, it really stands on three main pillars. First, there's the currency, Ether, or ETH. You can think of this as the fuel for the network. You pay with ETH to get things done. Second, you have the blockchain. Just picture a digital record book that everyone shares. The crucial part, once something is written in it, it can't be changed or erased by anyone. It's a permanent, totally transparent history of everything. And third, decentralization. This is the magic ingredient. It's not run by one company. It's run by a network of thousands of computers. That's what makes it so incredibly tough and resistant to censorship.
All right, let's tackle the most common point of confusion out there. We've said it's more than just money, but how exactly is it different from the most famous crypto of them all, Bitcoin?
This analogy on the slide is honestly the best way I've ever seen it explained. Think of Bitcoin as a calculator. It is brilliant at its one specific job, being secure digital money. It does that one thing incredibly well. Ethereum, on the other hand, well, it's like a smartphone. You don't buy a smartphone just to make calls, right? Its real power is in the millions of different apps you can build and run on it. That's the huge leap Ethereum made. It went from being a simple tool to becoming an entire ecosystem.
So what's the technology that turns Ethereum from that calculator into a smartphone? What's the secret sauce? Well, the magic, if you want to call it that, is a concept called smart contracts.
Now, don't let the name intimidate you. A smart contract is really just a piece of code that lives on the blockchain. It's basically a simple, if this happens, then do that statement that runs all by itself when the conditions are right. The truly revolutionary part is that it gets rid of the need for a middleman, like a bank or a lawyer, to make sure an agreement is kept. The code itself is the law.
Let's make this super clear with an example. Say you're hiring a freelancer online. Instead of chasing invoices and worrying about payment delays, you use a smart contract. Just like the slide says, you both agree on the terms, and the payment gets locked into the contract. The moment the freelancer submits the finished work, the contract sees that the condition has been met, and bam, the funds are released, automatically, instantly. No chasing payments, no arguments. The agreement just does its thing.
Okay, so if smart contracts are like the basic building blocks, what are people actually building with them? Well, this is where we get into the wild world of dApps, which is short for decentralized applications.
And the creativity here is just exploding. You've got decentralized finance, or DeFi, which is basically rebuilding the entire banking system, lending, borrowing, trading, but without any actual banks. You've got NFTs, which use Ethereum to prove without a doubt who owns a digital item. In gaming, players can finally truly own their in-game items and sell them if they want. And then there are DAOs, decentralized autonomous organizations. I mean, just imagine a whole company that runs itself based on code and votes from its members, with no CEO. It sounds like science fiction, but it's happening right now on Ethereum.
And this all brings us back to that one super powerful central idea. Ethereum introduced programmable money. It's money that isn't just for spending, it's for building.
But, of course, running a global computer isn't free, and it's definitely not without its own set of challenges. So let's get real for a minute and look at the practical side of actually using this network.
Every single thing you do on Ethereum, whether you're sending money, creating a contract, or playing a game,
It all requires a little bit of computational power, and you have to pay for that power. That payment is called a gas fee, and you pay it in ETH. It's kind of like putting fuel in your car to make it go. You pay gas to get your transaction processed by the network.
Now, for years and years, the energy use of this network was a massive criticism. It was secured by a process called mining, which, let's be honest, used a staggering amount of electricity. But not long ago, Ethereum went through this monumental upgrade. They switched to a whole new system called proof of stake. Now, instead of mining, users stake, or lock up, their own ETH to help secure the whole network.
And the impact of that one change? I mean, it's just mind-blowing. The switch to proof of stake slashed Ethereum's energy consumption by over 99%. That's one of the single biggest decarbonization events of any industry ever. But hey, it's not a perfect world. There are still some very real risks and challenges you need to know about. When the network gets really busy, those gas fees can spike, making it super expensive to do anything. It's also still a bit of a wild west out there, with plenty of scams you have to be careful of. The price of ETH itself can be incredibly volatile, and let's be real, the whole thing can still be pretty complex for a total beginner to get into safely.
So with all these possibilities and all these complexities, what's the bottom line? Why does any of this actually matter? Let's zoom out and look at the really big picture.
Here's the key. Ethereum is a live experiment, and it's fundamentally challenging our old ideas about how the internet, and maybe even society, can work. It's forcing us to ask new questions about what it means to own something digitally, how we can build financial systems that are open to absolutely everyone, and whether we can build new systems based on transparent code instead of just trusting old institutions.
All right, so to wrap this all up, if you remember just 4 things today, make it these. 1, Ethereum is a platform, that world computer. It's not just another currency. 2, smart contracts are its superpower. They automate agreements without a middleman. 3, it's decentralized, which means it's open for anyone, anywhere to build the next big thing. And finally, number 4, remember that this is a powerful but still very much evolving technology.
And that leaves us with one last big question. We started this by thinking of Ethereum as a shared global computer. The first wave of apps has already given us completely new kinds of finance and art. But the platform is open. The tools are there for anyone to use. So the real question for the future is, what will we build on it next?